Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, Chief Technical Analyst with StickyTrades. And before we get to the charts, just want to point out that my analysis is based off of my 7-point trading checklist, which is available to the public. If you would like a copy of this, you can set up a free membership at StickyTrades. Go to the member page, and then you could download it from there. If you'd rather not do that, then maybe you could take a screenshot right from this YouTube video and you could use it that way as well. But we would love to have you come on board as a member, of course, because you get some added bonuses with that as well. Now, going to the charts, take a look at DIA. I have a very small candle right there. It's even hard to see it. Let me magnify this for you. That is a doji, and it is forming right at the gap fill that was left back here in April, at the beginning of April. Now, if you follow along with my gap fill rules, you'll know that 80% of the time gaps fill, and then once they fill, you then have an 80% chance that prices will drop. So I'm expecting the market to drop right back down. I know I have a downside target already in place. That is not moving. I'll show you why I'm not moving or adjusting that downside target in a moment. But if you look down below, even though the diamonds were up today, you can see that the CCI down there is pivoting to the downside. That's a negative divergence. So now that the gap is filled up here, we have a resistance area there, and the open gap below the market will most likely act as a price magnet. So again, nothing is moving from that target, and I'll reiterate that for you so you can keep track of 379.61. Now, if you look back, you can see that I leave my target lines on the charts. You can see back here I had an upside target. That took a little while to fill, but it filled. This downside target filled. Downside target, this one took a while. Sometimes it takes a little while. This downside target took a little time as well. Upside target hit, downside hit, upside hit. You see, so my percentage of accuracy is extremely high. It's 83% hit rate, and I'm very confident that that target will eventually hit. Now, I'm going to add some bonus content here today. So this video is going to be slightly longer because I'd like to show you what I'm doing on the option side so that even if you're bearish with put spreads that are negative delta bearish spreads, you could still make money and make good money at that, because the volatility in some of these stocks is off the charts high, and that means that you get to collect money from the market. When the volatility is high, you get to collect credits, and you use those credits to pay down the cost basis of other options that you buy. I'll get more into that in a little bit. So that is the added bonus content for this week. If we look at IWM, you can see that this market was down today. We have a red candle. We have this long stretch of green down here, which is known as a stale green light. That is now broken by that red. We also have a gap that was filled, and we have a sell signal on the CCI right down there. See how the blue line, which is the CCI, crossing below the red line, that's a sell signal. And I believe on Monday, the stochastic, which is the blue line, will cross with the sell signal as it passes through the red line. Now, once that red line is crossed, the signal is generated, but the red line is a 3-period moving average of the stochastic itself. It's a very accurate oscillating indicator that I rely on, but the CCI is my favorite. You can look back here. The last time we crossed with the sell signal was back here in late March. You see that? And what happened after that sell signal took place? Boom. The market got smashed. So I am thinking downside. We have to be patient for those of you who are trading that as a swing trade. And I have a secondary target down here on IWM as well. That is 194.59. So my primary target is 198.95, and then we'll take it one step at a time. Again, we have a gap below the market right down there. Looking at QQQ, which is more or less the NASDAQ market, you can see we have a spinning top on lower volume yesterday and the day before. We have a hesitation here on the CCI, but the stochastic is also heading lower after an extremely overbought condition. Gap below the market still is going to act as a price magnet. So again, my QQQ target is 425.73, not moving that at all. Looking at SPY, which is the S&P 500 ETF, you can see that again, another spinning top. And same condition as what we just saw in the Qs. Slight gap below the market here, and we have another gap. So there's two gaps below the market. We have super heavy resistance up here at the top that I think will hold. So once we get to pivot lower, any new shorts that will come into the market will continue to put pressure at that level. So that is SPY. Now I want to talk a little bit about the VIX, because today, look at this, count the red. We have 8 red candles in a row, and we are right at a support level for the VIX. This is extremely interesting because while the VIX dropped today with that red candle, the CCI is actually going up. So once we get that buy signal, I think we'll see that on Monday and Tuesday. I think the VIX is going to start to trade higher and eventually move back to the moving average, and most likely beyond that moving average. So fasten your seatbelt when you see that pivot point. The gap on this VIX here, the downside gap has filled, and there's still an upside gap, which I gave a guarantee last week that that gap above the market will absolutely fill. I've guaranteed that because it's an oscillating index and it doesn't trend like a stock. So it'll go up and down, and the gaps fill 100% of the time. I want to mention one more stock, and that's SVRA. Remember last week I told you that I sold out of 100% of my position because I'm using the cash that was generated from the sale of 25% of my SLV position, and I sold it all out on that bearish harami right there. So this stock is dropping nicely. I'm looking to buy it all back. I'll put a target all down here right there for you, those of you that are following along with this, at $4.32, at which time I'm going to get back in and just play the up and down legs of this stock. It's a great trading stock for those of you who are looking for a cheap way to participate in the market, and I like it quite a bit. For those of you who are looking for inexpensive stocks to trade, we have an equity analysis service for people who are strictly equity traders. We do have a lot of option traders that participate in that service as well, because they'll just take my trade notifications and turn it into an option trade. Now I want to talk a little bit about what's going on here in the market. I'm seeing it as a Bass Ackwards kind of an event, because the bad news evidently is good news for the market when it's released, but you got to keep an eye on earnings. Check out what's going on. Starbucks dropped 20%, Uber dropped 10%, Shopify 20%, Netflix 10%. Read on down the line here. I consider those stocks to be leading indicators for the economy. I don't even pay attention to what the Fed and Bureau of Labor Statistics puts out. Those are all manipulated numbers. I'm seeing the real deal right here. When stocks are falling because they're missing earnings, and in some instances, they're beating the low ball earnings estimates, but they're dropping because of the outlooks that the company is reporting after the earnings report comes out. And if you take a look what Stanley Druckenmiller is talking about here, he sold out of 30% of his Nvidia stake. Now, this is pretty extreme. If some of you think I'm bearish, check this out. He said he sees AI stocks dropping 80%, like what we saw in 2000. Now, I would support that idea, because if you look at what's happening with this monthly chart of Nvidia, we have 8 fan lines. You hardly ever see 8 fan lines. A fan line is an accelerated trend line. So as the trend continues to accelerate, ultimately, number 8 was vertical growth. You cannot sustain that growth indefinitely. Eventually it has to break. So the number 8 fan line is broken. We've got the widest price divergence in the stock ever. The volume is dropping on the way up. That's bearish. The stochastic trigger to sell signal. See how I use my trading checklist on individual stocks as well. The CCI, as of today, has triggered. This was recorded yesterday, this chart. And the 50% Fibonacci retracement level is likely what we're going to see. And so according to the charts, a 50% retracement in the Fibonacci calculation here could see more or less a 50% drop in the stock. And so this is extremely interesting. Keep your eye on Nvidia because there's a lot of institutional participation. And if that starts to tank, the risk managers out there are going to start to take action and tell their traders to get out of positions. Here's another one where Nod on our team brought this to our attention and sent this out to the VIPs. Billionaire real estate investor Barry Sternlicht says he expects at least one bank failure per week due to real estate loans. There you go. I'm not trying to rain on any of the Bulls parade here, but I'm positioned for the downside. Now, you have to understand something. If you're part of our membership, you'll know that 95% of the shorter term trades that we have been placing have been bullish. And what we do is we look for bullish signals, even if the general markets are bearish, and then we get out very quickly. But our longer term positions are extremely bearish. And I'll show you how that works here in a moment. I'm going to challenge each and every one of you to do a Google search. Type in WEF, which stands for the World Economic Forum, and look at that transformation map. This is a little scary because this is an interactive map that they put together over a number of years. And I've been tracking the World Economic Forum for well over 15 years. And in fact, when I did events in Davos, Switzerland, I would hold those events at the Steigenberger Hotel in Davos right after the World Economic Forum would meet. And so we were mingling with a lot of these celebrities that would come and try to meet with the world bankers. And so as they were leaving, we were coming in and setting up for our event. And so I found it very interesting how much control they have. And the reason I want you to look at this, and you might be shocked, they have their hands in every single country and every single economy around the world. And they are changing the game big time. You may have heard the plan where they're looking to trigger what's called the Great Reset. Now, RFK Jr. put a warning out last week stating that the World Health Organization is on the verge of passing its pandemic treaty. You have this in Europe being voted on. The U.S. representatives are looking at this. Let me tell you, folks, if this passes, you have the World Health Organization controlling your life and not the government officials here in the U.S. I don't even know it's worse anymore. But keep an eye on this because this could shake things up in a big way, economically and financially. Because if we have anything at all like what we had in the crash of 2020, then this is something that you have to keep an eye out because it could very well duplicate. I'm not trying to predict if there's going to be another pandemic. I have no clue as to whether or not that could happen, but I find it very interesting that the World Health Organization is pushing to pass a pandemic treaty. All right, so let's take a look at the trade that I wanted to point out to you, and that was in DJT. Now, this is the bonus content that I want to put out to show you what we're doing. Back in January, we put on a put spread, and we bought LEAP puts. Now, if you're not familiar with options, the LEAP stands for Long-Term Equity Anticipation Security. And we bought a LEAP that expires in 2026. Here's what the actual trade looked like. On January 23rd, we went out and bought the January 2026 $50 puts. Now, when you buy a put, you want the market to go down. We paid $36 for that. And what happened month after month, because the volatility in the stock is so high, we sold other puts with different strike prices against our long put position. Now follow me here. You don't have to be an option trader to get this. It's just an example of what I do and what I show our members how to do. So each month as March expired and as the markets moved along, we moved from March to April, collected another credit. We moved from April to May, collected a big fat credit. And so what we're doing is we're collecting enough credits to now virtually pay off the entire cost basis of this original LEAP. Now remember, this is just from January 23rd. Now our option traders at this point virtually have no risk in this trade whatsoever. And when June expiration comes off the board, we're going to do what? We're going to take in another big fat credit and turn this zero risk spread into a cash cow. And each month we'll be taking in pretty sizable credits between now and when this option expires in January 2026. So this is just a sample of what we do. So before you folks get into trying to trade options for the first time, I would strongly recommend that you take some courses first. We have courses at StickyTrades that show you how to trade options, how to read the charts. We have what we call Sticky Trade University, and you could plug in with us and plug into my weekly webinars that I make available to each and every one of our members. So I hope you could join us. Thank you so much for liking, sharing, commenting. I love your comments, by the way. Keep that up. We're about to hit 11,000 subscribers. It's pretty amazing. In the last 2 months, our subscribers have increased by 10%. Pretty amazing growth. Thank you so much again. And I'll talk to you on the next video. So long.